then what sort of typical promote structures do you guys see, or would maybe the broader market see, if you don't want to talk specifically about your stuff? Like if you go, okay, we're expecting this return. I'm just trying to think of the pitch for the LPs, and I'm picturing somebody who's trying to start their own fund, or me trying to start my own fund. But like, what do people typically demand from the LP side, and then what returns are you kind of expecting for the GP?
I'll break it down into like the different types of food groups you see. So there'll be like what we call core plus, which is like stabilized product, cash flowing. That's like pension fund, like very stable stuff like TIA, CREF, institutional. Yeah. Then we've got what we'll call value add, where it's you go in and rehab a building, you're taking the rents from, let's say, $10 to $14, adding value. And then there's opportunistic, which is the super spicy stuff, so to speak, but not entitlement risk actually in the US. Doesn't include entitlement risk. Okay. Because you're not supposed to take it technically. Right. So on core plus, on a levered basis, you're going to be anywhere from, on gross IRR basis, anywhere from 9 to 12. Value add, you're going to be in the 13 to 16% range on a net basis. And when I talk about these net returns, these are to the end LP investor. Right. And these are institutional categories, so to speak. So they'll typically take the lowest return. And then on opportunistic side, we're talking like 16 to 18% net. Gotcha. These are net returns to like a big pension fund like CPPIB or California State Teachers Retirement System. So like with those categories, the further down the return spectrum you go, like, maybe there isn't even promote. Like if you're doing a cash flowing deal, maybe you're only getting like 5% of the upside, more of an asset management function. Right. But value add, opportunistic, really depending on the stage of, we'll call it risk. Like, is it like a piece of dirt? Is it an existing building? I'll talk about preferred returns. Typically preferred returns in the US, you'll see them anywhere start from, let's say, for value add opportunistic, 10 to 12%. You'll see them start there. And then the waterfall tiering of the profit sharing, we'll call it, you can cut it up a million ways, but on average, it'll be like a 15% profit share up to like a 14 to 16% levered return, then up to a 20% levered return. It'll be like a 20, 25%. It's different for every transaction. So typically what we'll do as a co-general partner and the sponsor, we'll share some of that economics, but that will vastly depend on our value that we're providing to the partner. They just want us to be a capital partner. We pay them a promote. They want us to be a co-developer. We'll share the promote anywhere from like 20% to like 35, 40%. Right. That's all negotiable, of course. I'm quoting these just because this market has like grown up and there is a quotable market. Right. It's not like this niche market. Institutional investors consider it niche. Right.
By the way, just framing that in the Canadian landscape, it's just slightly worse returns all across the board. Is that generally what you would expect, or no?
If I had to generalize, like we'll call it just from like the pension allocation perspective, returns are on average 150 to 300 basis points unlevered lower, depending on the strategy.
Gotcha.
And like from the Canadian perspective, it's tricky because you have less access to international deals. So like a good example. So if you look at like the California State Retirement System Pension Fund, which is like one of the largest in the US, it's like 400 billion. They invest 80% US, 2% or less in Canada, right? But they're the guys that, they're going to take the lowest return. Right. But then you have like an international investor, they'll be more allocated to like Norge Bank. They're 50% allocated to the US, but they'll still allocate 2% to Canada. Right. But then CPPIB or PSP that are Canadian pension funds, they'll invest like 10% into Canada. Right. But still like 60% or 50% into the US. Right. But in terms of, there's a reason for that. Because
and Brookfield and so on. It's like they're just all. I
mean, Brookfield's so big. It's like it's huge.
Yeah.
But they're not overly allocated into Canada because there's only like 38 million people here, 40 million people.
Right.
I think that's where all like that, funny 51st state stuff comes from.
Right.
Canada's huge. But again, I still think Canada's got really easy kind of like cheat code unlocks